Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news that this is a week where we get a fuller set of global inflation data, including from the UK, Japan, Canada, South Africa, Malaysia and New Zealand on Thursday. We'll also get Chinese GDP growth data for the first quarter, industrial production and retail sales for March, also on Tuesday, and there's a dairy auction on Wednesday. But first up today, China's new home prices rose in March from February at the fastest pace in 21 months, suggesting that the market is out of the doldrums amid a flurry of support policies, but there is uncertainty in the strength of the momentum there. New home prices in March edged up 0.5% month on month after a 0.3% rise in February, marking the fastest pace since June 2021 and the third consecutive monthly rise. But they're still lower on a year-on-year basis, although only by 0.8% now. And Singapore has surprised analysts with an unexpectedly weak first quarter GDP result, down 0.7% from the prior quarter. Actually, the fourth quarter 2022 result showed virtually no growth, so they're knocking on the door of recession there. But the biggest weekend news is that American retail sales fell in March from February to be just 2.9% higher than year-ago levels and far less than inflation's bite. Was a result that surprised analysts who had expected a 0.4% month-on-month fall when they got a 1% fall. However, other American indicators weren't so negative. Industrial production rose 0.4% in March from February to be 0.5% higher than a year ago. This data is real without inflation. And consumer sentiment, as measured by the widely watched University of Michigan survey, rose too. That shift wasn't expected, but it was in both views of current conditions and expected future conditions. However, Americans apparently still think inflation will rise, contrary to most other data that shows it falling. And the OECD is pointing out that global labour markets remain very tight in developed countries. In February, the unemployment rate remained at its record low in the OECD at 4.8%, and this is despite the euro area still much higher at 6.6%. And the US Treasury 10-year yield starts today at 3.52% and very little changed. And the price of gold is at $2,004 and down $1 from Saturday. A week ago it was $2,008, so actually very little net change there too. And oil prices are up just 50 US cents, at just on 82.50 a barrel in the US, while international Brent price just over $86 a barrel. And the Kiwi dollar has stayed down against the US dollar, still at 62.1 US cents. Against the Aussie, we've remained at 92.6 Australian cents. Against the euro, we're still at 56.5 euro cents. That all means our trade weight index is at 69.8, unchanged since Saturday, and still its lowest in almost 6 months. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.